All right, so today we're going to be talking about ground up construction loans. So this is for our investors out there. These are for fix and flippers or investors, builders, whatever you want to call them. And these are, just like your fix and flip, highly determined by your experience level. So we do obviously have options for fix and flip and even some ground up options that allow no experience, but those are rare and are going to limit things. So I'm not going to focus on that today. Our examples here, I have two examples of actual deals that I pulled up from our team where I copied the general terms. Obviously, we're not going to put the full deal info in here, but these are quotes that actually went out, updated with the latest rates, and was able to kick out some term sheets here. So, ground up construction is where, in example one, we own the land, or our borrower does in this case, obviously. Borrower owns the land and they want to build something on it, right? So they own the land, maybe they have their permits ready. All of these loans will require permits ready to go, everything planned out, ready to go in order to get the loan. So investor has their land sitting there with permits ready to go. They're ready to build. Now we're going to do a loan. We're going to put the land that's already owned in the loan, and we're going to get the rehab funds to build a brand new home on that loan, on that land. Sorry. Now, option two we have in example two is more of probably the traditional of what you're thinking, where an investor is going to go purchase a lot. Hopefully, the lot already has some plans and entitlements and all the stuff we need in place. Because remember, we have to be ready to go up to start building. We can't just have land that's going to sit there for a year to get permits, right? So, all of these options need to be ready to go. But basically, we're going to purchase a lot, probably in a development, right, that has sewer, electricity, everything ready to go. It's just ready to build, right? So we got a lot. We're going to purchase that, and then we're going to get all of the funds to build the home on that lot, roll it all into one loan, and in that case, we're going to have a down payment, obviously, as we're going to be buying a new property. So those are our two examples here. Remember, this is only for investment properties, and this is only for our investors with experience. You'll see that both of our examples here, they definitely did have good experience. So let me share my screen, and we'll get into more details here. So example one was an actual quote that went out for a ground up refinance where the borrower owned a $70,000 piece of land that was ready to build on. And they had a 760 FICO, so great FICO score, and 5 experience, meaning they had 5 large flips or ground up construction projects in the last 3 years, I believe, is the uh, uh, cutoff there. And we'll see here that we have a very great interest rate, 11.75. The appraised value of the land was 700, and we ended up getting 382,000. So a little confusing here if you're just looking at that. Let's go into the actual fix and flip analysis. And it is a little funky here because we own the land, so this is a little misleading. But the rest of it does make sense here. So in this scenario, we have an after repair value of $649,000. We're going to invest $517,000 with the rehab funds and the funds from the land we already purchased, plus fees, etc. And that means if we're able to sell it for the value that we think we're going to attain, 649 is what the investor told us, we're going to make a gross profit of $184,000 or 28% here in our return on investment. So all these other figures are coming in based on the different options that we have. So our as is a little misleading because it's a refi, but the loan to cost, the final loan to cost, means we're going to get 82.35% of the funds, which was, you see the little pop up there, 382,000, all of the rehab funds. And it's going to be the final, based on the final value of after repair value. And our after repair LTV is based on this as well. So a little bit of different figures here that we use for our fix and flip and ground up. Let's check out some of the other parameters here. The interest only payment is going to be this much for the 12 months that this investor is going to have the loan. This is a 12-month term. There was discount points paid on this. So this quote, this MLO that sent out this quote put 2 discount points on the fee here in order to buy down the rate. So that's why the rate is so low here. Typically the rates would be probably above 12 on average. So this was a little bit of a buy down. And some other factors to look at here. The 12-month term I mentioned, underwriting fee, and our broker fee here. So these are all the terms that go in to determine all the values, all the costs are add up, all the fees, all of that stuff, plus the rehab amount goes in to determine all our values. So great example here, our investor, if we do everything according to our plan, what they have planned out, and we're able to attain our 649 after repair value, we're going to make 28% return on their investment. So great investment for this investor. We were able to max out our terms here. Loan to cost typically max out at 85%. So this squeaks in just under the max. The investor is able to get all the funds they need for rehab. Everything worked out on this quote. It was a great setup and very easy to copy over. Now let's go into our ground up with a purchase. So this was a much bigger project and more of your traditional, as I mentioned, ground up as the way people think of it. An investor is going to buy a piece of land for $1 million. That's worth $1 million. So probably a nice big piece of land. And this example was California, right? So land is a little more expensive there. And obviously building homes is a little more expensive as well. So in this example, the borrower had a little bit lower FICO and a little bit less experience. And you can see that reflected in the interest rate here. So a few different factors. I'm not sure exactly why the MLO sent it like this, but perhaps that's what the borrower requested, right? So I'm just copying what they had. Two different scenarios for two different borrowers, two different requests. And you can see that there's different ways to slice this up. So on this one, we had a 15.75% interest rate because we didn't buy it down at all either. And we had a little bit lower FICO and a little bit lower experience. We had a 1 million purchase price. We're going to put an initial 100,000 down on the initial purchase, right? We got to put at least 90% on the initial purchase. So that's going to be our initial down payment. And we're going to get an initial 900,000 on the purchase. Then we're going to add the rehab funds to that. So let's go down into where the nitty gritty comes in on the fix and flip analysis. So this one turned out to be a great ROI, which is obviously what the investor is concerned on here, because it had an after repair value of 2.6. With all the numbers, when you put it all in here, the rehab, $1 million worth of rehab, plus $1 million in purchase, plus fees, etc., ends up being this cost, and the investor is looking at making about $550,000 once they're able to sell it, if they're able to attain their goal here of $2.6 million after repair value. So the as-is LTV, loan to cost here, you see we got even higher on the loan to cost, which is pretty amazing, because there is still a good amount of profit here. ARV, LTV, all these different factors are ways we measure and determine the maximum loan amount. So as these amounts go up and down, the calculators that we have to use to determine these programs will either say yes or no, or reduce the LTV on the initial purchase, reduce the amount of the rehab, etc. So let's go into the numbers here. This is a monthly payment, pretty hefty, but obviously this is a big developer. As its value was 1 million, the developer is going to purchase it for 1 million. They're going to rehab it for 1 million. They're going to end up paying 200,000 in interest if they go the full 12 months. So they probably should definitely get it off their books sooner than later. The total cost here with the interest, with the fees, all that stuff is going to be 2.3 million. And if they're able to attain their ending goal here, they're going to attain almost $550,000. Now, 12-month term, underwriting fee, and broker fee are all in there. So that's how we set up those quotes. Definitely very difficult. And let me switch my screen and show you more of the way that we kick it out to the investor here, which is another way to analyze it. So just to show you an example of the way it prints out when we do a term sheet quote here. So once we're done with all our numbers, obviously we get all the quote in there, we get some initial numbers, and once we get it all into the platform where we can actually issue these loans, this is what pops out, right? So we obviously need to put all the info in here. But you'll see in our first example, we had a borrower experience of 5, the refinance, all of the scenario is put in here, and it lays it all out in more of a chart offer and lays out the loan offer in more of a traditional kind of layout here. So obviously we'll quote it as many times as we can, and then we'll get more into the nitty gritty here. This is what's called a term sheet. that we would then send to our borrowers, which is more traditional for your bridge loan, which encompasses both ground up and fix and flip. So we'll quote it with our system, and then once we're ready to proceed, we'll actually issue a traditional term sheet. So those are the ways we can structure a ground up for our investors.
So I think we can go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a topic. So we'll be back tomorrow with a new topic for you. Thank you, everybody, for tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.